You're sitting at your desk staring at the screen. The market is moving, but you're not reacting how you thought you would. You feel like you're just not watching the price action anymore. You're controlling it. You're convinced that if you can just make the right move, everything will work out. You need to be in control. You need to have a plan, right? But here's the truth. No matter how hard you try, the market isn't something that you can control. You're just a tiny fish in a vast ocean, swimming with the current, hoping to stay afloat. Let me explain why this illusion of control is the real trap that keeps traders stuck in a cycle of failure. Look, I get it. We've all been there. The constant chase for control in a market that's inherently unpredictable. The idea that we can shape the market to fit our plans, our biases, our egos. But let's take a step back. What does it really mean to control something? It's easy to say you need control when you're looking at a chart, but deep down, we all know that the best traders can't control the market. They can control their responses, their strategy, and their mindset, but not the market itself. The truth is, control isn't something you grab. It's something you let go of. Now let's talk about some of the things we've all done in an attempt to control the market. Imagine this. You've just taken a losing trade. Your account's down and your mind starts racing. You tell yourself, I need to make it back. I can't walk away like this. So what do? You dive right back in. You force a trade, maybe even against your strategy, maybe even the opposite. You're looking for a setup that isn't there. You might even be trying to make up those losses from earlier, trying to regain control by making just one more trade. The reality, you're not in control. You're reacting from desperation. You're trying to force something that's not meant to be. You might have tried to force a bias. Maybe the market's neutral, but you've convinced yourself that there's a clear direction. It's got to go up, right? Or this dip is the perfect buying opportunity. You ignore your plan because you want it to go a certain way. You think that if you just believe it, you can make it happen. But no matter how much you wish it, the market doesn't care. It's not here to validate your predictions or to make you feel like you're winning. It's here to teach you lessons about patience, discipline, and the truth that you can't control everything. Let me paint a picture for you. Picture a trader, let's call him Dave. Dave has been trading for a couple of years. He's got some decent knowledge of technical analysis, and he's committed to his system. But here's the problem. Dave is obsessed with being right. Every single trade has to validate his analysis. If he's wrong, it's like the world is collapsing. One day, Dave sees a setup he's been waiting for, a bullish breakout. He sees the chart, pattern, the volume, everything's aligned with what he's learned. But here's the catch. There's uncertainty in the market. The volume is okay, but it's not as strong as Dave would like, and there's no confirmation from other indicators. Dave ignores that. Why? Because he needs this trade to work. He's been in a losing streak, and his ego is telling him, you have to be right. He forces the trade. He takes a larger position than usual to make up for recent losses. The trade goes against him, fear sets in, but Dave won't quit. He's convinced that this trade is going to work. He moves his stop loss, thinking that it'll bounce back. The trade continues to move against him. Eventually, Dave's entire position is wiped out. He loses $6,000 in a single trade, which could have been avoided if he had accepted the uncertainty and stuck to his rules. But in trying to control the outcome, Dave sabotaged his own success. This isn't just about technicals, it's about the psychological battle that happens when we feel like we need to control the market. Now let's look at someone else. Let's call her Sarah. Sarah has also been trading for a couple of years, and she's experienced her own share of losses, but she's learned something along the way. She's learned to embrace the uncertainty. Sarah sees a similar setup as Dave, the breakout she's been waiting for, but this time she takes a different approach. Instead of forcing the trade because of the need to be right, she evaluates the setup based on her strategy, not her emotions. She sees that while the pattern looks good, there's a level of uncertainty. There's low volume and some other indicators aren't aligned. Instead of taking the trade, Sarah walks away. She acknowledges the uncertainty and moves on. She's okay with not being in a trade if the conditions don't meet her strategy. The next day, a new setup comes along. It's clearer. The volume is high and the indicators aligned. She takes the trade, but she's prepared for both outcomes. Sarah manages her risk, keeps her emotions in check, and follows her strategy. She wins on the trade, but the key is she doesn't tie her self-worth to the outcome. She continues to trust her process, and that's where she finds real control. Mark Douglas in Trading in the Zone talks about how traders who need to be right are setting themselves up for failure. He writes about the concept of accepting the randomness of the market. The moment you let go of the need to control every outcome and start accepting uncertainty, you stop sabotaging yourself. It's not about predicting every move. It's about reacting to what's in front of you without emotional attachment. Douglas emphasizes that trading is not about being right. It's about managing the risk associated with every trade and letting the results happen without forcing them. When you allow yourself to be uncertain, when you stop trying to control every trade, you create the mental space to make better, more disciplined decisions. The problem with trying to control the market is that at its core, it's about control over yourself, over your emotions, your beliefs, and your expectations. The more you try to force outcomes, the more you disconnect from the reality of the market. True control comes from within. It comes from managing your expectations, your emotions, and how you respond to each trade. It's not about being rigid or controlling every aspect. It's about allowing yourself to be flexible and adaptable in the face of uncertainty. One of the biggest mistakes I made in my early trading career was trying to control the outcome. I was so focused on the number at the end of the day that I lost sight of the process. But when I learned to focus on what I could control, risk management, discipline, and sticking to my strategy, I started seeing real progress. Here's the reality. As traders, we're not in control of the market, but we are in control of how we respond to it. We can choose to let go of the need to force outcomes, to make up losses, or to chase every move. Instead, we can focus on what's truly important, sticking to our plan, managing risk, and keeping our emotions in check. And if you can do that, you will find a true sense of control, not in what's happening on the screen, but in how you handle it. If this video resonated with you, hit that subscribe button. We're all in this one together, learning, evolving, and growing as traders. The journey isn't easy, but it's worth it. And remember, true control comes from accepting the chaos and focusing on the things that matter most. We're rooting for each other one step at a time. See you in the next video. Peace.